Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by Buxton. Look, check them out for mobile and predictive analytics. It's incredible what this company can provide for you. If you're looking at site selection, you're looking at properties, you're looking to try to value, finance, anything commercial real estate, especially single tenant net lease properties, check it out. Their website is buxtonco.com. And today we're going to talk about single tenant net lease investment properties. You know, the market has been really interesting. We had such a great 2021 with sales volume and buyer demand and cap rate compression. And now we're potentially into a bit of a changing market. We have inflation running rampant. We have the Fed talking about 3, 4, some folks say more increases in the interest rates. So, you know, what's going to be the impact there? And so we may be in a little bit of change in market. And when you look at markets changing, one of the interesting property types is the single tenant net lease market, right? You have the strong credit tenants with typically long leases. And in a lot of the volatile markets, buyers really clamor to these property types. Well, what might happen there? Because the cost of money really does impact commercial real estate in a pretty big way. Well, please welcome my guest. It's Nancy Miller, and Nancy is a partner with Bull Realty, and she's president of the Net Lease Group, and she has been selling single-tenant net lease properties for 15 years. I already call you out on that, Nancy.
Thanks, Michael. Thank you very much.
You're welcome. Well, Nancy, as I mentioned, 2021 was just an incredible year for cap rate compression, and I know that net lease market was very hot, with some real cap rate compression going on. What are some cap rates trends and samples that you've seen in the market recently?
Well, cap rates since 19 have really dropped. I have a couple notes here that in 19 we had about a 6.54% average cap rate for single tenant properties. It dropped a little in 20 to about 6.43, and last year by end of year we're about 6.03. Wow. So significant drop.
It's a really drop.
Yeah.
And what are some sample cap rates you saw on some specific properties that you sold?
I sold properties that it was also based upon the length of lease, but typically your dollar stores were selling in the high 5s, low 6s. Your QSRs were selling in the high 5s. Your auto tire was even a little bit lower. It just depended on the quality of the tenant and the location and the length of the lease term.
Yeah, and I saw some banks and things selling for like 3.5, 4 caps. It's pretty crazy. So what are some of the reasons, Nancy, that you saw for such incredible demand in the past year?
Well, as you know, of course, but our listeners may not, that the 1031 exchange was at issue, whether it was going to stay or not. So it caused a feeding frenzy, if you will, for folks who have 1031 properties that they bought or they want to exercise a 1031 exchange to go ahead and get that done. Otherwise, the alternative is to pay Uncle Sam capital gains. And I think that we also had concern about what would interest rates do. As you mentioned at the opening, they're so low now, they can only go up. So those were the primary drivers, I think.
Okay. And of course, the Fed's announced they're going to have several interest rate hikes this year and next. And I was wondering, as you're doing the market today, have you ever seen any change yet on asking cap rates or demand yet?
Yes, we're seeing asking cap rates continue to stay at the levels that they have been lower this last year. They're staying the same, and primarily because there's an issue of still lack of supply of properties out there in the market. The momentum from last year to this year has not yet stopped. In fact, folks that were trying to did later in the year a 1031 exchange, and they didn't finish it, they're carrying over to this year as well. So we're seeing a ton of that.
Yeah, and here we are. We're in February of 2022. You're probably listening or watching to this month, but in case it's later. So Nancy, what do you expect moving forward with the talk about these interest rate hikes in the single tenant net lease world?
Well, as you know, people like single tenant because of the stability. Some single tenant leases are flat for a long period of time. Others have rent bumps over time. What we're concerned about is as interest rates rise, cap rates are probably also going to rise. And so if I have a flat lease like a Dollar General or any other long-term lease, they're going to be flat and I buy in now, but interest rates are going up and rents aren't going up. My rents are staying the same. So I'm likely to be looking at a time where I want to find tenants that have rent bumps over time so that they can keep up with rising interest rates as well and so forth.
Yeah, it seems like the single tenant net lease world, in my view, of all the sectors, might be most impacted by rising rates because, to your point, you do have some of those leases that don't have as much escalations as maybe some of the office and retail multi-tenant we sell 2-3% annual increases, right? So you can kind of keep up potentially with rising rates.
Sure.
One thing I want to ask you about, Nancy, with the huge volume you've done for 15 years and as you're doing it today, I was working with a buyer recently and they said, we want to look at oil change places and we want to look at gas stations. And I'm like, you do? Have you heard all about these electric cars that are going to be coming out? Is that what if you really want a long-term stable investment, is that really what you want? What are you seeing though? You're really in the market. Are they with these types of properties that sell gas and oil changes?
That's a really a great question, and to abbreviate my response to it, there are a couple different sectors within that change of EV, electric vehicles, that could be impacted. Gas stations and C-stores or convenience stores are one, but those guys are so nimble. What they'll wind up doing is evolving. They'll become little gourmet food markets or food prepared to, this, that, and the other. And they'll have EV stations. Wawa, for example, we just sold one recently, and they had them sign an EV gas. They have 8 electric EV charging stations
already
on the property. And so I think that those kinds of stores will be nimble. Oil change, not so sure. They may evolve into nice car washes, or they may start selling auto parts or tires. And I love tire stores, by the way, because whether you have an EV or a gas-fired car, if you have a flat tire, you're going to be finding your tire store no matter what, and they are not internet dependent at all. You need a tire. You need a tire.
That's right. That's right. And let's jump to the financing that you see. Sure. Are you seeing any interest rate increases yet on these mortgages?
We did in the third and fourth quarter, 25-year amortization or 30-year amortizations, which are very typical in single tenant net lease. They were somewhere in the mid 3s, and we're getting quotes now from the high 3s to the low 4s for the same basic setup. So we're definitely seeing an increase, and I don't know if it's, I think it's the beginning of the start of what we've been talking about. Yeah,
well, interesting to see that could alter valuations fairly quickly. And speaking of valuations, Nancy, what if an investor kind of likes the single tenant net lease world for all its benefits, but they're trying to get a little bit higher return than a 4 cap or even a 5 or 6 cap in some places?
Well, what I advise folks to do is maybe instead of getting that 10 or 15-year long-term lease, get a great tenant, a good credit tenant, but get a shorter-term lease. If it's a good location, a good piece of real estate, they're going to renew, and you'll get your rent bump sooner.
You'll guarantee that renewal, Nancy?
Oh, yeah, sure, why not? And the other thought would be to look at some of the double net leases. They have a tendency to have a little bit higher cap rate, maybe 25 basis points higher, and the new double net leases are improved. Sometimes there's a roof warranty, and sometimes the tenant's more responsible than they were in the past. And, and just look at smaller markets. If you can't find what you want on Main and Main at $1,000 a square foot, look in Podunk and maybe pay $600 a square foot and get the same return.
Yeah, yeah. Well, that's interesting. And I know you use this tool, but Buxton at buxtonco.com, they have an incredible tool where you can, if you're looking at a property that has a short-term lease and you're trying to analyze the chances of the renewal, you can use their tool to really see their exact traffic they have and compare it to other stores where they have renewed or what would be a normal normal flow of customers. So you don't have to go sit there and count customers in your car all day. You can actually get the incredible accuracy, Nancy. And I know you use this. And now, and I want to jump now to just some of the tenants and that you see in the industry. Are you seeing any trends with some of these single tenant companies?
Yeah, some of the tenants are continuing to build more and more new construction in smaller markets because people don't want to necessarily travel, and they need a lot of essential business items, especially in the environment of COVID. Labor shortages are causing some of the casual dining to shrink their hours of operation. I heard on the radio the other day that also some of the people are complaining that some of the fast foods are charging you the same amount for a hamburger, but they're making the hamburger smaller. So, and the footprints are shrinking a little bit. Some of the drugstore closings of the Rite Aids and the Walgreens and so forth that we saw in the recent past, that's kind of leveled off. And I think there's an opportunity in the market to look at things like medical, dock-in-a-box, urgent care, those kinds of things, dental, even pet care and things that are more of a medical nature. And a lot of them are placing themselves in better geography, better retail locations. And we're seeing more and more of that. And those are not as strong of a credit tenant as it might be of an Arby's or a dollar store or something like that. So it's a good opportunity for someone to consider an essential business with a relatively low level of risk.
I like that. I like those tenant uses as well. Well, Nancy, before you go, what would you leave our audience to think about in the market moving forward?
Well, the momentum that's been created has not stopped. This is still the top of the market. If someone is interested in selling, prices are high, supply is low. It's a good time. But what they really need to do is if they're thinking about that, look at what are your goals, long-term, short-term. What would you do if you sold that property? What are your criteria to go buy something else or not? And just to look at maybe diversifying. If you're in oil change right now, you may want to sell and go into another market just to protect yourselves, because we're at the top of the market. And I would say just to capitalize on the moment and find out what your property is worth today, and make an informed decision. And while cap rates are low, interest rates still are relatively low. So now is a good time for you to get somebody to be attracted to a property, or a good time for you to switch into another property while interest rates are still good. So you get a low interest rate and you get a high sell value for your property. It's good. Yeah.
Well, I like that. I mean, it's an interesting sector because you might sell a property, right, that's got a shorter lease, and maybe a 1031 to something with a longer lease.
Sure.
Or maybe you're in New England states and you're saying, well, let me sell those and trade into some 1030. Maybe I'm going to retire in Arizona, or I'm going to retire in Florida. Right?
Well, the nice thing about net lease, it doesn't matter where the property is, because it's basically, as we say, it's mailbox money, and you trade in your plunger for a lazy boy, as I like to say to people who sell their apartments and buy them. That's
a good point, but I like to drive by my property and see it right there and make sure tenant's doing good, Nancy.
Okay, you do that. You do that.
All right, we'll get that done. Nancy, thank you very much for joining us. Appreciate your insight. And thank you for joining us around the country. Thanks for sharing the show. Please connect with us on your favorite social media. And until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's commercial real estate show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decision with on-demand mobile data. Visit buxtonco.com. By Bull Realty, for proven commercial real estate asset and occupancy solutions. Contact me. My email is michael@bullrealty.com. By Commercial Agent Success, expert level commercial real estate broker training, Cloud Access 1, up to 21 one-hour videos. Visit commercialagentsuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.